If it was hot in January, it's going to get even hotter in February, at least in the short run, because the reasons for the declines in the 10-year Treasury to record lows are going to drive mortgage rates lower and even increase that demand that's out there in the marketplace. And demand responds a lot more quickly than supply. So increased demand, lack of supply, even more pressure in the housing market this month and next.
Low rates can pull people off the couch and get them to go to open houses and check things out. But a virus outbreak is going to drive them back to the couch, isn't it?
That's right. So, don't get sick, but try and shop for a home. That's the trick. And obviously, to the extent that things change, not so much financially with the response we're seeing today in the stock market, but over the next few weeks, what happens with the coronavirus and its economic impacts and how much it impacts consumer confidence and whether we want to stay home, then it really doesn't matter. I mean, we're not going to care about what the mortgage rate is if we're more concerned about our health and safety. But that actually could help, because one of the challenges right now is you have such strong demand relative to supply, and that's the imbalance that's driving house prices and the hot market. And so in the medium term, that actually might mute or bring a little bit of balance to the market.
Why has supply been the big problem over the past several years? Why aren't people selling?
Well, you have one long-run effect, which is we've not really been building enough new stock, so that sort of creates some shortage. But as you point out, the more important thing is people aren't selling because, in large part, they're locking in 3.5% and 4% mortgages, and that disincents you from selling. And then, in addition, when there isn't a lot of supply, it's not like I can go and buy any home. I have to buy a home that's better than the one I have today, and all homes are different. So this fear of not being able to find something that you like better to buy also holds people from selling their home in the first place.
Mark, we saw prices start to reaccelerate in the back half of last year. Do you think that acceleration continues this year in spite of coronavirus and other risks?
Absolutely. As long as that demand and supply imbalance exists and people are out shopping for homes and that spring home buying season gets all that much hotter than it already is, even with the early start, that's just a recipe for even faster price appreciation. Price is the governor that really balances out that imbalance in demand and supply.
How much higher do you think we would need to go in order to balance things out, for lack of a better word?
Well, it's interesting. It would be easy to see a 6 or a 7% house price appreciation rate on an annualized basis in many of the really tight markets this spring. That said, even with if the economic impacts begin to materialize and the Fed cuts rates or treasuries go lower, that actually increases buying power, which allows people to bid up those prices. So, prices rising doesn't necessarily mean housing is less affordable. In fact, prices rising might be in response to housing being made more affordable by lower rates.
Diana, let me just conclude with a question for you. Prices in many desirable markets, whether it's D.C. or Nashville or San Francisco or whatever, they've gone up quite a bit over the past 5, 7, 10 years. And I wonder whether that contributes to the idea that people don't want to move because they got their house that maybe they paid $500,000 for. But if they chose to move, they'd be looking at a house and a mortgage at $900,000, and they don't want to take on that financial burden.
Right. I mean, that's why the mobility rate is so low right now, is because people do have a lot of equity in their homes and they don't want to have to move up into that larger house. It's going to cost them a lot more. I mean, in those hot housing markets, you did see prices start to ease up, especially in San Francisco. But in the rest of the country, you're seeing people staying where they are, renovating, remodeling a lot more because they simply don't want to get into a pricey market that could start to ease up, and then they're catching a falling knife.